Hey, just pulled up to, I don't know if you can see it. Maybe the house is behind me. I'm in a new construction subdivision and want to take a moment to give some credit advice. I just left court with a client who unfortunately had to evict a tenant, and it's a sad situation. They got to go. The judge says they have until the 5th to be out, 7 days from today. It was a sad situation for several reasons. My client unfortunately didn't take my advice and contacted me too soon. She had a vacant property, had some people that needed a place to go. They told her that they would be able to buy in a month or two. So she put them in the home and then gave me a call a few weeks later and said, hey, can you help them with the contract and make this happen? Sure. So shortly after talking to them, it was apparent to me they weren't going to be able to buy. But they kept giving my client the stories of this and that. Things dragged on, and finally my client listened to me and saw the light at the end of the tunnel and said they got to go. So they didn't pay this month. They should file the eviction. They got to go. There was no way that they were going to buy. And it's sad because they have kids. They have a life. Husband now has to take off of work, help the family move. I don't know what they're going to do. They don't have good credit, and they don't have a lot of money. So quick tips to help you not be in that situation. First piece of advice, ghetto advice. They didn't pay in January. This is January 2018. They didn't pay. This is the 29th day of January, and the judge just said you've got 7 days to get out. Ghetto advice is if you have a mortgage and you have a rough month and you can't pay your mortgage that month, you've got at least 90 to 120 days before they kick you out. And number two, you can actually call them and work something out and say, hey, this is what happened. This is what's going on in my life. You want to make sure you communicate with your mortgage company. Sometimes they'll do things like, for example, if your mortgage is $1,000, they'll let your mortgage be $500 for the next 3 months until you're able to get back on your feet. They'll take those missed payments and put it on the back of the loan and say, hey, let's just give you a fresh start. They don't want the house. They're banks. They want your money. And if they have to take the house back, they lose. So communicate with your mortgage company. Work with them. In Georgia, you've got about 90 to 120 days before they even go through the process and consider doing the foreclosure. It's a little more strict than that, but as far as how it's practiced, you've got time. If you're a renter, you don't get your situation right, and you're a renter and something happens, you're gone. So first piece of advice is ghetto advice. Second piece of advice is you want to make sure that your available credit versus the credit that you actually use is at least 50% or less. The magic number actually is 33%. You want it to be at least 33% less than what your available credit is. So in this situation, let's say it's $1,000 credit card you have. You want to be at $500 or less. If you were to want your credit to skyrocket, you want to be at $333 or less to get the most out of your credit. But conventional wisdom says, hey, I need to pay my credit card down to make that happen. But if we're trying to be responsible and do the right thing, you actually want to call your credit card company first and ask them for increase in your line of credit. Now, you don't want to get the increase so you go use it. You want to get the increase so that you can get to that 50% or less. So if they increase your $1,000 to $2,000, it doesn't cost you any extra money, just knowledge. Make the call. And then you want to still pay it down, of course, but this is going to help your credit score improve along the way. Let's say you do pay it down. If you're responsible, you still are going to want to ask for the increase, because not only are they going to see what your current credit card balance is as they judge your credit score, they're going to look at the history. When you're applying, you want to get one of those fancy cards. That's something important that they're going to look at. They're going to look at the history. Did they often max the card out? Well, if you get that increase, no matter what your previous high balance was, it's not going to show as such. So simple advice there. Another piece of advice is it's sometimes easier to get credit approved when you go into Macy's or Sears or basically store credit. Not something where it's a big purchase for thousands of dollars or anything like that, but something where you can go in, get some clothes, you walk up to the counter, you wait for them to ask the magic question, you smile, you say, yes, I would like to apply. Let them apply. If you're 550, 580 or something like that, need to get above that 600 mark, you're often going to be able to get approved for something like that fairly easy. They might just give you $200, $300. That's all you need to show that you can handle credit. And what you're going to do is you're going to put all the clothes back and get a pair of socks. Put $10 on there. Go back next month, buy some underwear. Keep your drawers fresh. Spend another $10, but always pay it off when it comes. Keep doing that. Never, on something like that, you don't want to ever go over $50 because you don't need to consume and get into that habit of consuming. And again, you don't want to max it out and get a $300 purchase because that's going to show bad history of, hey, I used my available credit. Unless you will return right back around and pay it off. I've seen people do that. They'll use the discount with the card, turn right back around, pay it off. You don't want your balance to ever show or higher than 50% in a situation like that. The other thing that you could do is if you don't get approved for a simple store credit or something like that, we all have our situations that happens. You can get what's called a secured credit card. What means is if you have extra $200 or $500, you can actually go to the bank, give them that money, and then in return they give you a credit card for the same amount. So they're protected. You're basically borrowing your own money, and it's going to help you establish credit and get that credit score up. What that does for you is get you into the credit game. You're going to want to follow the same principles. 33% is the golden number. Never go above 50% at all costs. And yeah, just some credit tips. You get to a 620, there's a program you can get 100% financing. You get to a 660, there's a program you can get 100% financing and no mortgage insurance. That saves you tons of money. These people that got kicked out, they were just paying $900 a month. If they had that program, their payment would have probably been $600 or $650. If they had conventional financing, the payment would have been $750. So they were paying more because they were renting on the same house. So some credit advice from Robert, Berkshire Hathaway Home Services. I hope it helped. I hope it was quick. And maybe I'll go back and edit this video and put my contact information, or if you're on my page, check it out. Always check out myallenhouse.com, free home search, and some pretty cool tools. If you own a home and you want to know what it's worth, allen.house. Just type in allen.house. House is like com, so allen.house. It'll take you to a nice cool site that gives you some ideas of what the value might be. So hope you enjoyed it. Talk to you guys later.